Welcome to the program. I'm Okpayemi Owoshini. We start off with business news. The Federal Executive Council has approved Nigeria's full membership of the Asian Infrastructure Investment Bank as a non-regional member, marking a significant milestone in the country's international economic engagement. The Council also approved the transmission of a bill to the National Assembly to establish the National Cocoa Management Board in a bid to revitalize the cocoa sector. Now, speaking to journalists at the State House Abuja after the FEC meeting presided over by President Bola Ahmed Tinubu, the Minister of Finance and Coordinating Minister of the Economy, Wale Edun, said the decision to formalize Nigeria's membership in the AIIB is aimed at boosting infrastructure development and promoting long-term.
Clearly, it's an Asia headquartered bank with the key members from Asia, but they do have members from other regions, and I think it was around 2021 Nigeria was invited to become a member, and we completed that formal, legal and administrative process, including payment for the shares. We've concluded that process now, and we are fully fledged members of the Asian Infrastructure Investment Bank, of course, which is set up to promote infrastructure development and generally sustained economic growth in all its members.
We'll go on a break now. I'll be back with company news. Welcome back. Access Holdings has announced the appointment of Ibironke Adeyemi as an independent non-executive director, strengthening the diversity and expertise within its board. The appointment, approved by the Central Bank of Nigeria, became effective on April 15, 2025, marking a strategic move to integrate extensive leadership, experience in education, finance, and corporate governance into the company's decision-making framework. Adeyemi brings over 30 years of experience spanning finance, management, and governance, making her an invaluable addition to the board. Dangote Sugar Refinery PLC has released its unaudited Q1 2025 financial result, reporting a record high quarterly revenue of 213.93 billion naira, up 74.31% year-on-year. Notably, this figure already represents 32% of the company's total revenue for the full year 2024. Now, despite the strong top-line growth, profitability remains under pressure due to rise in raw material costs. In the first quarter of 2025, the cost of sales consumed 95.67% of revenue, leaving minimal room to cover operating, interest, and other expenses. We'll go on a break now, but when Money Matters return, we'll be discussing oil price plunging below $60 per barrel. I'll bring you details after this break. Welcome back. Nigeria is staring down the barrel of twin macroeconomic shocks as Brent crude prices plunge below $60 per barrel. Now, this development could destabilize the country's fragile exchange rate regime and widen an already gaping fiscal deficit. Now, the sharp drop in oil prices driven by accelerated OPEC Plus supply increases and weakened global demand has triggered anxiety in government circles and among investors. At the core of this brewing challenge is the 2025 federal budget, which was predicted on an oil price benchmark of $75 per barrel and daily production of 2.06 million barrels. As of March 2025, both assumptions appear grossly optimistic. Brent has stumbled to $59.25 per barrel, and Nigeria's production averaged just 1.737 million barrels per day in January and 1.672 million in February 2025. Now, that's according to data for the Ministry of Finance. Now, to unpack what this means for Nigeria's economy, I'm joined now by the Group Managing Director of Capital Banker PLC, Mr. Agbolawon Olojede. Thank you for being with us, sir. Now, how vulnerable is Nigeria's 2025 budget to current oil market realities, given the benchmark of $75 per barrel and production target of 2.06 million barrels per day in 2025?
Well, it's not good news for that budget at all. The implications are, they could be severe depending on how low the oil price eventually go. So on one part, oil price is also part of our, an indication of part of our revenue. So part of the government's revenue comes from oil. If the price of oil falls, then that component of government's revenue will also reduce. And that has implications for deficit financing, because what it means is that government will not have as much money as it predicted it was going to have. Then if it still wants to go ahead and implement the budget, the expenditure side of things, then it may need to borrow more to fill that gap. Borrowing has its own consequences. You have to service the loan. Your loan size starts to also go up. So that's a challenge on one side. But the more worrisome challenge is actually how it might impact foreign exchange supply. While crude oil, sales revenue does not constitute, as large a portion of our revenue as it used to constitute, it still constitutes a chunk of our foreign exchange earnings. So most of our foreign exchange earnings still comes from oil. So when oil price falls, then the amount of foreign exchange we're going to be able to generate from oil also reduces. Because it reduces our supply of foreign exchange, which is essential to stabilizing our exchange rate, also reduces. The implication is that there might be some pressure on the naira if our foreign exchange earnings should reduce the way by virtue of what we're talking about.
Now, with oil production now lagging behind and prices falling below $60, now how realistic is the 19.6 trillion naira projected oil revenue, and what are the implications if the shortfall materializes?
If the shortfall materializes, we may need to borrow more to be able to implement the budget. That's what it means. The debt burden will increase. On the other part also is the implication for foreign exchange supply, because it will reduce the volume of foreign exchange that is available to us, and that could also put pressure on the naira. So we might have naira struggling to maintain that relative stability that it has been able to achieve over the past few months. Since the second half of 2024, the exchange rate has been relatively stable. It's high in terms of rate, but it is stable. Now, that stability in itself is the number one thing we needed to have achieved, and we have achieved it reasonably. But if something puts pressure on the naira by virtue of the continual crash in oil price, we might get to a point where that stability might give way to some element of volatility.
Now, given the widening fiscal deficit, potentially up to 30 trillion naira, what would you say are the best and most sustainable options available to the Nigerian government to plug the gap?
Well, there are so many things. The part of what the government wanted to do this year, as reflected in the budget, was to increase our oil production. So we've seen the target move up to over $2 million. That was, 2 million barrels per day, which will have helped us to make more money and by extension reduce our deficit financing. But with what is going on right now, we are not so sure how impactful that will be. However, if we continue to ensure that we grow oil production, it will still be in the long term, the medium to long term interest of Nigeria, and it will help us in reducing deficit financing in future years. So one of the things we must, because we have this oil, we have the gas. Interestingly, the gas price is more resilient than the crude oil price. And we have, as a matter of fact, we are a gas nation. So the more we can get from that side, the better for us. Oil, gas, and then we have petrochemicals, which we can begin to launch into. So with institutions like the Dangote refinery, being able to go all the way to the production of urea and fertilizer and being able to export all of that, there are implications for foreign exchange earnings for the country from all those ones. We need to rev up activities along those directions. Of course, there is the industrialization. We need to do more with industrialization. Unfortunately, we are heavily constrained by the availability of power. There cannot be industrialization if our grid electricity remains at 5,000 megawatts. There is no developed nation that develops on 5,000 megawatts. Of course, there are non-grid production, but the non-grid productions are not industrial in nature for the most part in Nigeria. There are those small generators that people are using in their homes and some little solar panel on some of the roofs. Those are not the kind of electricity that will help to drive industrialization. So we must plan for industrialization. We must also look at the service side of things. You see, technology has changed the dynamics and the composition of a lot of economies across the world. How about services? People have been talking about how, even when you go abroad these days, you see Nigerian doctors are the ones that will still attend to you in South Africa. They are still the ones that will attend to you in America or in UK, where you have gone to. That is a service. If we look closely at that sector, we can find a way to do a reverse tourism back into Nigeria. I saw a communication between a friend of mine and his own friend who lives in the US. The friend is trying to come to Nigeria to come and do a procedure. Why? Because when he looked at the cost of doing that same procedure in America, vis-a-vis doing it in Nigeria, the American cost were about 4 times for him. So he was shopping for the right places in Nigeria where he can come and have that procedure. That's an isolated situation, but we can be deliberate about ensuring we can have more of such reverse tourism, which people can come to Nigeria and and enjoy certain services simply because the cost is much cheaper in Nigeria. So in the service area, whether it is technology, people are coming from wherever countries they are to this country to come and recruit our tech people. A lot of tech, we were trying to hire some junior techies here some times ago. None of them even want to work in an office. They want to be in their homes. Because they're already in their homes and they're making money. So they're getting recruited. We need to see how we can make a robust plan to expand what is possible within that space and use it to extend the reach of our GDP and grow the GDP in those areas beyond oil.
Now, the Naira recently crossed 1,600 Naira in both markets. Now, how much strain does this put on the CBN's ability to maintain FX stability, especially with falling oil receipts as we've seen?
Yeah, CBN is coping for now, but the pressure is there, which is why we just have to wish, because unfortunately we do not control what happens in the international oil space. So it is only what is within our own control that we can deal with. What is within our control is to see how we can improve production. so that with increased production, we will be able to defray part of the losses from price. That is what is in our control. Otherwise, if that does not happen over time, as we bleed from the foreign exchange earnings that we're not getting because of the price, the pressure on the naira will increase and stability cannot be guaranteed. So some element of depreciation, volatility might come into that space.
Well, like you mentioned earlier, Ms. Olojede, Nigeria has little to no influence in OPEC Plus and is also underproducing. Now, how does this limit our ability to shield the economy from oil price volatility?
I don't think we will, in the short to medium term, be able to influence oil price. I don't think that is what we need to focus on. What we probably need to focus on includes how we monetize more of our gas asset and how we develop the petrochemicals. So when you look today at exporters of fertilizers and urea, across the world, you see the potential, the huge potential for a country like Nigeria to play in that space. By virtue of the fact that we have the gas in abundance, we have oil. And these are byproducts on the petrochemical side of things, of this same oil and gas that we're talking about. So our focus needs to shift away from, I'm not even sure we've been playing there anyway, trying to see how we can influence via OPEC or whatever. We've had influence in OPEC. We've produced president of, is it president they use for it now? The head of the OPEC institution in the past. But that does not in itself help us to influence the price of oil in the market. It is way beyond what we can do. So we shouldn't even bother to waste our energy in that area. Rather, focus on how we can monetize more of our gas assets, as it were, and develop our petrochemical space properly.
Now, in the first quarter of 2025, there was a reported $15.2 billion net FX inflow. Now, do you think Nigeria can continue defending the naira if oil receipts remain weak?
You said net inflow, which was positive, right? So, whatever has been bringing this net inflows, we need to analyze it. And you can be sure that all this is not oil. So whatever else is in that mix that we can grow, then we need to grow it. As simple as that. What has happened in the first quarter of 2025, it's not just about FX inflow. There are certain elements of recoveries that has happened. When you take the financials of Nigerian companies in quarter 1 2025, and you compare it with quarter 1 2024, you can see the recovery. Now, having seen the recovery, it is important to be able to sustain that recovery that we have seen. An FX situation is something that could frustrate that sustainability. So it behoves on the government to, my choice of word is to have a resilience plan. We can see the horizon that oil is challenged. The price of oil in the international market, there's a huge challenge to that. So we must be asking ourselves, the gains that has been made, the gains of fairly stable exchange rate, the gains of corporate recovery. So you see an MTN that did over 500 billion loss in quarter 1 2024 has come to 203 billion profit in quarter 1 2025. The same thing goes for Cadbury, goes for MBL, goes for IBL, goes for Nestle. So there is a corporate recovery, and we have to be deliberate about how we sustain it. And this is where that resilience plan comes in, to ensure that foreign exchange problems will not frustrate the gains that have been made so far, because it is in the sustenance of these gains that it can begin to see the pass-through effect on the economy in general. It doesn't automatically start dropping to the economy like that, but when you sustain it, then the economy will feel the full impact of it. But if we are not able to sustain it, that would be a major challenge for us.
Let's now talk about inflation. It has been steady so far, despite increasing slightly in March 2025 to about 24%. What will you say are the likely spillover effect of this oil price shock on inflation, interest rates, and even employment, which is something we've been battling with for a very long time in the country?
If the exchange rate becomes volatile again, if the naira continue to depreciate, we will have a return of the rise in inflation. Of course, the last inflation inched up a little bit, but if we go back to those eras of very high volatility like we had in the early part of 2024, then we're going to have inflation come up again. We're going to have all those challenges that we had in early 2024 or in 2023 come back to us. We will begin to see corporate profit will start to shrink again. There might be certain losses that will happen, if corporate do not adjust fast enough to what is going on. So that will be the effect. And once you start to see inflation increasing, corporate profit shrinking, then the economy will generally just slow down. That will be the effect on the economy.
The Dangote refinery has yet to reach expected output levels, and other domestic refineries remain underperforming. That's the Port Harcourt refinery and Warri refinery. Now, what strategic actions do you think the Nigerian government can take to strengthen local refining capacity and also reduce dependence on imports?
I think we need to look more to the private sector for help. Port Harcourt's refinery said it was I think it was actually producing at some point because people went to Port Harcourt refinery to load, and that was the reality. Has it been able to sustain that level of productivity? I'm not so sure. There has not been recent news about whether it has been able to sustain that. Rather, was a sad news about Warri refineries, revamp having flopped. That was the way the news put it. So meanwhile, I remember we celebrated that Warri also started to produce, but it has apparently failed. And on one side, there has to be some element of accountability in this country if you're ever going to move forward. If a country has spent close to $1 billion to revamp a refinery, and that refinery has flopped, you should ask questions. But that's on one side. As far as I'm concerned, I never had any hope that government is capable of bringing back those refineries to the right level of state we would have loved them to be. So if they cannot do that, then we should be able to support the private initiatives. The Dangote refinery being the biggest, but there are others that are also into that refining space. These are also some of the things that could help us to cushion the losses from the crude space. Because if we produce, of course, I know you said now that maybe Dangote is not producing enough for us to use. We're not so sure. That is not the story from Dangote. Dangote's story is that I can produce what this nation will consume. And while on the other side, we see government saying, no, you cannot produce it, we have to continue to import. We're not so sure whether the continued importation is really because of of the inadequacy of the production from Dangote, or there are other reasons why those has to be sustained. Is it for price? You want competition? Or are there other interests that are not being spoken about why we have to continue to import? What is important is this country must, be able to produce more than we consume. Export. The question, why should a Ghana or a Togo or a Benin go to Kazakhstan to go and import petrol, for example, if Nigeria is right here beside it, and we can refine and produce quality fuel and export to them? Why are we not the ones supplying the entire West Africa with fuel by virtue of the capacity that exists here in Nigeria? But there are complexities around that side. I hope that the new board of NNPC will be able to help us resolve some of those complexities and help us move this nation forward as far as refining and oil-related matters is concerned.
Now, finally, just before I let you go, Mr. Olojede, this is the 5th month of the year, and we have about 7 months to go, meaning there's still like a very long time before the year comes to an end. What immediate policy moves would you advise the Nigerian government to take to manage both the fiscal and FX risk if oil prices remain low for the rest of the year, because we cannot predict what will happen before the year comes to an end?
We need to look at all other areas where we can generate FX. That is number one. We need to look at all the areas where we are spending the FX that we generate. So one of the places, one of the uses we are deploying the FX we generate to is to go and import fuel. So how about we find a way to reduce what we import? It was unfortunate, I remember reading somewhere that in October last year, that was after Dangote Refinery had started operations, that what we imported was even more than what we used to import. So a country that continues to import, even when there is a local capacity for production, must ask itself those fundamental questions. So we must say, what are we spending this effect that we earn for? How can we curtail that? Consuming Nigeria, producing quality things in Nigeria that people can, consume, and also reorientating the people to do substitution. There was a policy that was endorsed by the president yesterday that says, we should consume our own. So that consuming our own kind of policy will help us to conserve a lot of money. And I hope that government will show forth commitments, and it won't just be paper. So if we're saying we want to consume our own as Nigeria, it means there are car producers in Nigeria. And where it starts is that when public sector itself is buying cars, it should buy Nigeria. And not be you can't stop people from using whatever car they want to buy, but the one that will be bought with government money should be Nigerian cars. They are private people, they want to use the one from Germany, they can use their personal money to buy it and ride it. But the one government is spending money to buy should be largely Nigerian. And even the senior people, including up till the president, must be willing to consume Nigeria as well. That is how to drive consumption of Nigeria. If we do that, we reduce what we spend our hard-earned foreign exchange on. Then we now have to look at how do we earn foreign exchange. Earning foreign exchange from improving our capacity to refine and export and reducing all those games. There are some schemes and games that we don't understand about issue of refined products and the importation of refined products in Nigeria. If we can resolve that, we probably will save money, we'll produce more than we consume, we'll be able to export and earn foreign exchange from there. We also need to look at issues around remittances by Nigerians, and if there is anything we can do to shore up all those remittances. Improving our production will also help, so that the money we are losing on the price side of things, if we can make it up on the volume side of things, then we'll be able to recover some of those losses from foreign exchange.
Well, the Group Managing Director of Capital Bank of PLC, Mr. Gbolahan Olojede, many thanks for lending your thoughts on the program. And that's it on this episode of the program. Many thanks for joining us. I'm Okpeyemi Owoseni. See you next time.